Today we're going to start our session with a conversation with Steve Eskenazi. He is a very experienced angel investor, and I invited Steve to come and talk about angel investing, his work in angel investing, trends, and so on. Steve, welcome to the show.
Thank you for having me, Smara.
Do you go by Steven or Steve?
Either one is fine.
Okay. All right. Well, let's start with a little bit of your background so we can introduce you to our audience. Tell us a bit about what path you have traveled until, where you are today, a little bit.
Sure. So my career has had sort of three distinct series of jobs. In the 1990s, I was Wall Street's first digital media analyst, introducing Wall Street to companies like America Online and Electronic Arts. Then for the next 10 years, I was a venture capitalist with a firm called 1Mby1M, where we invested in internet companies and SaaS companies and digital media companies. Our most well-known investment at the first round level was in Pandora, the music service. And then my wife and I found ourselves in an interesting position in the late 2000s, and we had 3 kids in 18 months. And I decided to sort of take a different path, and I decided to unwind from my venture capital firm and become an angel investor and focus on my home-based startup, the 3 kids. And for the last, I would say, dozen years, I've been spending my time about a third with my family, a third on my own portfolio as an angel investor, and a third in terms of giving back and mentoring and trying to help people in and around the community. So that's a bit of a background, and I'm sure we'll get into some more questions.
Yeah, I know your colleagues at Walden, at least 2 of them reasonably well, Libu and Somdas. So talk about what you like to invest in. Did you formulate an investment thesis for your angel investment practice, and how did you decide on which direction to go, and where is your sweet spot?
Uh-huh. So I invest as an angel in 2 broad categories: technology and life sciences, and there's some investments in the intersection. My bias is towards companies I can help. I'm rarely a passive investor per se. And my bias is towards working with other groups and teams. I've been a member of J-Angels, which is a Israeli angel group. I've been a member of TIE. I'm a member of a group called SV Quad, which is Kanwal Reki, who I'm sure you know, which invests as a group together in Series A and C deals. But I mean, I like to invest in things I feel passionately about. I'm not going to invest in the next startup that brings something to your door at 1 a.m. that you've been hungering for. I like to be a contrarian. I like to invest in new and interesting spaces. But I think what sets investments apart for me, different than when I was a venture capitalist, where I had a fiduciary responsibility to increase the return on investment, is in the people. If there are relationships that can be built, and if I can help with my network with younger entrepreneurs, that's what I really like to do, is to help entrepreneurs fulfill their dreams and help them not avoid mistakes, because everybody makes mistakes, but to catch them early and to figure out a methodology around dealing with the issues that young companies trying to sort of prove product market fit and then scale once they've proven that product market fit. That's really where I like to like to focus my time.
So in terms of writing checks, do you invest pre-product market fit or post-product market fit?
Both. You know, and my check sizes range from $25,000 to $1 million. There is no rhyme or reason. I rarely invest alone. I like to bring in my friends and other colleagues that I've known throughout the years, and
yeah,
you know, the more value add help, the better.
So when you're writing a $25,000 check size, what is the typical round with your friends included? Typically, the $250K, $100K. Where do you start?
Well, I can give you an example of a company that we just invested in called Resonado. That's based in Chicago, and my group, I think, put in 450, and the other lead put in 450, and it was a little over a $2 million round.
And this is actually perfect. Let's do some more examples of the kinds of companies you like to. So Resonado, is that a IT sector investment or a life sciences sector investment?
It's an IT. It's a technology company that's in that occupies the intersection of technology and consumer electronics. If we all recall, our first TVs that we watched, they were, you know, about that thick, and now TVs are this thin. They're doing for the speaker market what was done to the TV market. So they're making flat core speakers, and they're making the enabling technology. They don't make the speakers. They don't manufacture the speakers. They license their technology. They're heavily patent protected, and they have found traction with sound bars, with smart speakers, with the recreation space, both RVs and boats. And it's a neat company that is making a product that is faster, better, cheaper, smaller, and more ergonomic and better for the environment too. So it's an interesting space that not a lot of people are focused on.
Let's talk about a few more of these examples of where you have put in, and I'd like to actually hear also how they came to you and what stage they came to you, and what is it about them that caught your attention. So in this case, was it the fact that they had technology that was already IP protected, patent protected?
I think it was the entrepreneur. I met the entrepreneur either through Thai or through the J Angels group, the Israeli group. And I kept in touch with him for a couple of years, and he continued to reach out for advice. He is a South Korean entrepreneur whose dad was an executive at Samsung. And interesting story, the dad sent the family to the U.S. to study. And this entrepreneur went to Notre Dame, but had to go back to South Korea to serve in the army. He served at the demilitarized zone in between North Korea and South Korea, reunited with his dad. And his dad said, I have all these ideas from my time at Samsung. Why don't you take one of these ideas and run with it? So it was definitely the fact that I like that market. With Lip-Bu, we had invested in Creative Labs way back when, which is a Singapore company. I know we have Singapore investor, Singapore entrepreneur on the WebEx, and it was just a situation where I really gravitated towards this entrepreneur and trying to help him out. And go ahead.
So tell us a few more of these case studies, just to kind of get a feel for what kind of things that you like to invest in. I'm just trying to gauge, kind of listen to stories, basically.
Sure. So one of my longest investments is in a company called 1Mby1M Pediatrics, which is an East Coast-based company. It's a childhood friend of mine who is solving for the problem that parents of young kids have, which are the kids don't just get sick between 9 and 5. They offer after hours care, and they've done this now for 15 years, so they were more on the pioneer side. And they've moved towards a telehealth practice, and their competition is emergency rooms, which average waiting time is 4.5 hours, and they're in lots of strip malls, and they have executed and built a company that's now well over 200 million in revenue, and exploring what kind of liquidity options and exit scenarios they might have. So another interesting, and that's in the middle of life sciences and technology, because now telehealth is part of their practice.
So we don't do life sciences per se, but what you're talking about is the category of digital health is very much within our purview. So yeah.
Exactly. I can give you another example of a deal I just did. It's a young Israeli entrepreneur. In fact, he dropped out of high school to do this. He set up a service on Discord as a new music channel. They were taking YouTube videos and allowing people to be their own DJs in a house party type setting. He grew it to over 20 million daily active users before Google and Discord shut them down, and they've kept their community intact. They have now explored doing this in a 100% legal fashion, and they're in that process now. It's called Rhythm.fm. So that's a very early stage, first check, and again, it was the strong connection with the entrepreneur that and my ability to help him. He's local here in Silicon Valley. That got me excited.
So here's a trend question, Steve. What is your analysis? You have watched the music business for a long time, from Pandora on. What is your analysis of the music business? We see music deals here in these roundtables from time to time, and a lot of the industry believes you can't really make money in the music business. You clearly have a different point of view. Can you talk about how you analyze the music business?
Yeah, I don't look at it that binary. Some people say it's, you can't make any money, or you can. I think it's very selectively investable. And that's been my approach. And I've probably raised the bar higher on music deals. And I was a private investor in Spotify as well. I've raised the bar on music deals more than I would in other spaces that are broadly investable. So I would probably agree with the people that say it's really tough, if not close to impossible, to make money in the music space. This is
what business model would you invest in? Is it the subscription business model?
I think it's a combination. I think people don't realize how successful GoFundMe has been. So in the case of these services, you don't necessarily have to say you need to pay us X amount, but interestingly enough, some companies have found they've made more money from saying, we provide this service for free, but we're kind of starving students, and if you would consider giving us $10 or $5 or $20, hit the GoFundMe. That's been a very successful way of funding the company and getting it going before you could figure out exactly what the precise
But what is the steady state business model? You start with the GoFundMe campaign, Kickstarter campaign, but what is the steady state business model people can sustain a company on the basis of?
Well, in this case, it's a freemium model where if you want to play disc jockey, and if you're in any of these Discord rooms, you'll see it. You may be able to immediately publish to an NFT. So you bring in other aspects of business models. In this case, NFTs. Ultimately, I think there will be a subset that will want to subscribe, and then if you have, in this case, they got off of their own without any money, they got up to 20 million DAUs a month. That opens the advertising door as well. So it's not a single business model per se. Rana, it's a couple of different ones and how they sort of fit together. And the beauty of the online business is that you can test these out. You can do A/B testing in different geographies, different communities to figure out really what's going to stick.
And talk a little bit about NFT as a business model or apps of, applications of NFT, use cases of NFT. What are you seeing? Has anything stuck with you that is particularly noteworthy?
Well, I will say the two most popular, if there have been trends, broad trends, I think sort of, Web3 crypto NFT has been one. And then I would say that NIL and the influencer economy has been the other. NIL standing for name, image, likeness, and how do I monetize it? Specifically for NFT, I would say it's still in the embryonic stage, trying to find its footing. I think we've seen some incredible miscalculations in terms of the value. You looked at Jack Dorsey's first tweet at, what was it, $4.5 million, and then it was resold for a couple of $100. So I still think these are looking for their footing. I do think there are certainly both niche and broader applications, but I think they're going to have to be proven out over the next year or two, because sadly there has been a bunch of, I don't want to say fraud, but haven't been the most scrupulous characters. They've been bidding up their own NFTs to create artificial pricing. So I think the biggest issue for NFT is there really isn't the stability of the pricing model around NFT is not there yet. So you look for the niche environments and applications where it can start to be proven out.
Do you think the art world is going to embrace NFTs? And I'm talking about the physical art world, not just the digital art world. The digital art NFT world, I have some question marks against, but what about the physical art world?
I think they will. I think they will dip their toe and test it out. I think they will. They will look at some hybrid. I think they'll look at some hybrid models, and I think there are ways of combining physical and digital that are kind of interesting.
Yeah.
I think that is certainly something that I don't see having the downsides that some of the other applications we just talked about have.
Yeah. I was talking to Eric Benamou 2 days ago, and he was like, I'm looking for a good application for an NFT. I'm really looking for a good use case. I'm like, yeah, maybe the art one is a decent use case that has more validity than many of the other, like Jack Dorsey's tweet certainly has no validity, in my opinion. All right, well, what about exits? What all have you seen through your investments? What has been some of your interesting exits, and what have you learned trends-wise from those?
Well, I think there are a couple of tried and true sort of commandments. I think the best companies get bought; they're not sold. I think you have to I think you have to build companies the right way, and you have to scale them the right way. And when I say the right way, I mean that throwing money at problems is not a solution to the problems. And I think we're now going to go through a tough digestion process for the next year or two, whereby companies just raise money and money and money and money, never solve the problems of institutionalizing knowledge and building processes within the companies to scale them effectively. And now now it's all coming home to roost. And it's going to be a very tough workout. I think some of the companies that, I've invested in that have had, exits have gotten over those things. TransferWise, Alibaba, Spotify, for example, certainly Pandora. That they built companies to be independent, and then if and when somebody else came along, they looked at those opportunistically. I think for the earlier stage market and entrepreneurs, I think setting up milestones for each fundraising that you do, and then setting them up such that after you've hit those milestones, you can go back to the market and do quote unquote a market check, which allows you to either bring more money in or look if there's a partner out there that might be interested, is much better than sort of, the proverbial, we're building a company to be sold. I think it's important to identify those milestones that create value. And as I said before, to build in the processes and the institutionalized knowledge that will allow you to scale, and then give yourself those additional options without sort of closing or narrowing your exit.
Interesting. So we've done quite a bit of work in these sessions, bringing on investors to talk about how they're thinking about exits, especially the early exit category. And then I've brought on people from the corp dev world also to talk about exit from the buy side. And I want to underscore a couple of nuggets that you would probably appreciate. Example, in the cybersecurity universe, small funds, some of the small funds are starting to think about kind of building to sell, just because it's become so difficult. There's cybersecurity is so invested. There's so many companies, so many investors who've invested in cybersecurity. Just getting meetings with the enterprise CISOs and CIOs has been really difficult. So they have to go through other people, maybe the managed service providers or other companies, and become their OEM, partner, somehow or the other, to get the seat at the table has been really hard. So I think the early stage investors in cybersecurity are starting to think about an alternative of building to sell to a larger company that has that seat at the table. So that's one nugget that I want to kind of share. On the buy side, one of the guidance that the corp dev people are providing is also that there is so much going on. They need to know about the existence of a company, right? So even if you don't build to sell, you kind of need to make sure that you're on the radar of the people who may be on your exit strategy path. So they're, whether it's the chief product officer or the product managers who are in that related product group of a potential buyer, or the corp dev people, they kind of somehow or the other, there needs to be some PR or something around your product such that they get to know about you. So these are just my two kind of nuances to your comment that companies get bought but not sold. But you do need to create the conditions under which they can be bought.
I agree, and cybersecurity is a very interesting market because of that. Clearly, there's an important delineation between point solutions and end-to-end solutions. Point solutions are easy to buy and easy to integrate. And secondly, if we look at the hiring market in general, I've seen more companies miss their hiring targets than miss their revenue targets. So companies are searching for good people. So the whole
acqui-hire, absolutely.
Right. Right. When you say, can we sell a company for 10 million? I mean, that's really an acqui-hire, right? For the bigger companies, right? I had invested in a company called Duo Security that sold to Cisco just for that reason. The company thought they were going to go public, and then Cisco came up and said, "Hey, this is a niche area that we really like, and as a result, we're gonna take you out now." So I think that works in the cybersecurity space. Other spaces probably more difficult, but I think the tailwind is really the notion that most big companies can't find enough good people. So if somebody's got an R&D team or a product team or has institutional knowledge in a space that's new and different, I think the value is going to be perceived a lot higher.
Yeah, very good. Steve, great conversation. Thank you for coming today and sharing your thoughts.
Sharmana, my pleasure. Anytime.
Take care. We'll see you soon.
Okay. Bye-bye.
Bye.